Okay. So yesterday what we did was about understanding the types of methods. Okay, the methods used for accounting, in which we just did one of the method, that was cash method, and then we saw what are the different types of cash methods. In cash method, how you can receive the money through actual receipt, through cash equivalent, and the third one was the constructive receipt. Okay, this much we did yesterday. Also we saw that in case of prepaid rent, even if you receive a rent on advance basis, then you are going to include it in your income in the same year in which it is received. Okay, next is deductions. From here I think it is left, let me check. Yeah, so deductions, a cash method, taxpayer will deduct the expenditure when they are actually paid. See, if they are paying it in advance, and if the client is using, the taxpayer is using cash method, then they will not take it into consideration, even if they are paying it in advance. Maximum they can take is maximum for the 12 month. Okay, let's say I'll take one example. The policy insurance premium is paid for 3 years, next 3 years. Okay, so for next 36 months already the amount is paid, but the policy amount is paid in the month of June. So can I say only for the 6 month is related to current year, only the 6 month has been accrued, so only for 6 month expense you will record it in your tax return. Okay, so what it is mentioning for deductions, a cash method taxpayer will deduct expenditure when actually paid, except for prepaid rent. For prepaid rent we have already seen, this is prepaid rent which you receive as an income. But let's take another side, that let's say you are paying the rent. Okay, so for prepaid rent you can take a deduction maximum up to 12 months in advance. Okay, there will be one question based on this topic. If you're prepaying your rent, let's say they are given an option that you are prepaying a rent for 14 months, then you can only take the deduction maximum up to 12 months, not more than that. Okay, I'll see there will be some MCQ based on this. Next is, a promise to pay without more is not a payment. Okay, a promise to pay, I've just made a promise that okay, I will be paying in the next month. Let's say in December month I have made a promise that on 10th of Jan I will be paying $1,000. So this is not the actual payment which we are doing, it will be done in the next month. So you'll have to include it in the next year tax return, not in the current year as a deduction. If you are presenting a check, okay, check represents payment when delivered or sent. Same as the constructive receipt, just think like that. As soon as you receive the check, it will be called as your income. Same way, as soon as you hand over the check to anyone whom you want to pay the amount, will be called as payment. As soon as you hand over, it will not, we will not see that when he's depositing the check, when the amount is withdrawn from our bank, that will not be checked. As soon as you hand over the check to someone else, that time it will be called as an expense. Okay, so these two are the situation. That's why in accounting, those who are working in the accounting background, they might be using the bank reconciliation. In bank reconciliation, you always find one column that is uncleared checks. Okay, uncleared checks, even though those are uncleared, let's say you have issued some check and those are uncleared, or you have received some checks and those are uncleared, okay, still it will be treated as an income, and still it will be treated as a deduction, even though they are outstanding. See what will happen, let's say I have given a check to Vaibhav, for example, for $1,000 on today. Let's say today is 3rd November. Okay, today I've handed over him a check, but he forgot to deposit it. He is depositing it in the month of let's say December. Okay, December. So what I will do in the month of November, as soon as I gave him the check, I will record this $1,000 in my books as an expense, as a deduction. Okay, but since my bank balance is not getting reduced because he has not withdrawn this amount from the by depositing the check, So that is why always the accounting team will find a difference between the bank balance and the accounting balance, and always it will be reconciled with the uncleared checks. So what, for the tax purpose, what we will consider it, we will allow that deduction even if you issue the check. It doesn't matter whether it is getting cleared or not. Okay. Third one is a third party credit card charge transaction represents a current payment with loan proceeds. Okay, bank is going to charge certain amount for let's say deduction for the charges, but for using the credit card. Okay, for using the credit card, extra charges is getting deducted by the bank, or a second party credit card charge transaction is not paid until charge is paid off. What does this mean? Let's say you are running a business and you are using a machine. Okay, that machine is a card swiping machine. So it is given to you by, let's say, HDFC Bank. Okay, and this HDFC Bank will receive all the payments which is swiped by this machine. Okay, now what this bank will do, this bank will deposit the same amount into Mr. A's account. Let's say Mr. A is running the business, and this bank will deduct certain percentage of its commission. So this percentage, this deduction are your credit card charges transaction, which represents a current payment. Okay, or let's say second party, that is example store credit card charge transaction is not paid until charge is paid off. So this what it is saying, actually when you pay those expenses, it doesn't mean that it has to be just accrued. Actually when you pay it, it will be included in that month for cash basis taxpayer. If you have a bad debt, okay, bad debt adjusted basis in accounts receivable is deductible when debt becomes worthless. Okay, but for cash method, can I say they will not use bad debt at all, because they are not going to record any accounts receivable. They will record as and when the cash is received. So since cash method taxpayer usually has no basis in account receivable, they may not deduct any bad debt. So there will be one MCQ, one liner MCQ in the exam. It can come in the exam that a cash basis taxpayer can deduct the bad debts at what point of time? The answer will be they will not be allowed to deduct the bad debts at all, because cash basis taxpayer is selling everything in cash, means they are going to record in their books as and when they actually receive the cash or receive the payment, or as and when they actually pay the expenses or make the payment for any expenses related to business. Okay, so this one you can mark. Next one is interest on loan issued at discount. Okay, if any loan which is issued at discount or unstated interest. What do you mean by loan issued at discount? It can happen that if you're taking a loan from a family friend or any other, internally you are taking a loan from a friend or a family friend, they can give you at a lower rate of interest. So can I say that lower rate is your discounted rate? So interest which you're going to pay on a discounted rate, or unstated or imputed interest. Imputed interest is same thing, which is FMV of that type of loan is, let's say, 8%, but you are receiving the same loan at, let's say, 6%. So imputed rate is 2%. Okay, it will be deducted. This 6% interest will be deducted pro rata over the life of the loan. Sometime it happens that if you take a loan from a family friend, what will happen? You will pay either the interest on daily, on the monthly basis, on a consistent basis, or you pay interest on two installments. Okay, installments, that is 6 month and then later 6 month, rest 6 month. So what will happen? This whole loan is of, let's say, 2 years, so it will be allocated between 2 years equally. Let's say the interest expense is 5,000. 5,000 will be allocated between these 2 years. You will not include it as and when it is paid, even though it's a cash basis, still it is a discounted rate of interest which is given. That's why the whole actual payment of interest will be allocable within 2 years. You cannot take the whole deduction in only 1 year. See here what the family friend is saying, you have to pay the interest in only 2 installment. In first year only you have to recover the interest amount. So it is not practically allowed by the IRS that you take the loan and take the deduction in the first year only. Actually, it needs to be allocated over the term of the life of the loan. Okay, so this is what you can remember. Next is, a person who uses cash method to report gross income must use cash method to report the expenses. This we will see again, this line we will see again in the hybrid method of accounting. What it says is, if you are using cash method for recording income, any expense pertaining to that same income needs to be recorded on cash basis only. Practically, this is not possible to bifurcate it in this manner. What they do practically, all the inventory related item will be recorded on accrual basis. Okay, and they record all the income on cash basis and expenses on cash basis. So you have to remember, when incomes are recorded on cash method, expenses will also have to use the cash method of accounting only. If income are recorded on accrual method, expense will also have to be recorded on accrual method. Else what will happen, there will be a huge timing difference which you can see in your profit when you report it on your tax return. Okay, we will see that in partnership in corporation when we do the M1 and M2 topic. In that there is one column which is known as timing difference. This type of different accounting methods if are used, that causes a timing difference. Okay, timing difference is caused due to what? Let's say you have received an income but you are deferring it to another year, or if you have provided the services but you are deferring your income to the next year, but the expense relating to that is recorded in a reverse manner. Means you're recording expense today but income you are deferring it to the another year. That thing is wrong. That thing is not allowed in taxation. That's why you need to record the difference in your timing difference. Okay, right now don't get confused. Just right now understand, whatever method you're using for calculating or for recording your income will be used in the recording of your expense. Okay, no different method should be used. Next is advance payment of taxes. What it is saying, in advance payment of expenses, in general, expense paid in advance can be deducted only in the year in which they apply. Means, I'll take one example, rent paid in advance. Okay, it will be deducted in the year in which you are taking the benefit. Let's say I am paying the rent in the month of November for next 15 months. But this rent will be accruing for current year for how many months? For November and December. So in 2023, whatever rent I have paid, let's say 15,000 I have paid, I'll divide it by 15 months and I'll take only 2 months, means $2,000 as a rent expense in current year. Okay, so you have to take this. See, this, even the person is using cash basis, still they will use this accrual method for recording the advance payment of expenses. They will not record the whole amount. In India, what happens, as the person is using the cash method, if there is any advance payment, they'll record whole as it is in the P&L. In US taxation, they will not allow you to do this thing. Only up to, see, in bookkeeping you will record it. Bookkeeping you might record whole 15,000 payment made to the XYZ person for renting of the property, for paying the rent. But when you take it in the tax return, when you enter that 15,000 in tax return, that thing is not allowed, and that remaining 13,000 extra which we have charged will be adjusted in our M1. When we see the M1 reconciliation, we'll do that. Okay, I hope this much is clear. Advance payment of taxes will not be allowed unless and until the expenses are accrued. Okay, so in general, expenses paid in advance can be deducted only in the year to which they apply, even under cash method of accounting. So this thing is important. even cash or accrual, in both the cases, same application will be done. Okay. However, an exception exists for farmers. If a person is into farming business, they may deduct prepaid feed when expenditure is incurred, even if it is to be consumed by the livestock in subsequent year. See, they get a very good offer if they buy the stock which is used as a food for livestock, right? For cow, buffaloes, and every animals for which they are buying the food. For horses, they are buying the food in advance. Let's say for whole year they are stocking the goods which will be used as a consumption for food. So for them, they have given the exception. If it is bought in advance, then also it will be allowed as a deduction in your farming income. Okay. A cash method cannot be used by corporations, partnerships having a corporation as a partner or a tax shelter. Okay, so cash method cannot be used by this people. By whom? By corporation. S corp can use, just a minute, why it is saying this, for advance payment. However, an exception allows following entities to use cash. Okay, so see, normally these are the exception, you will able to understand that. But remember one thing, cash method will not be used by the corporation, by a partnership who is having a corporation as a partner. See, corporation is here, they are talking about 1120 C corp. Okay, day one we have understood the difference between C corp and the S corp, right? So if you are a C corp, you cannot use cash method, but wait for the exceptions right now. I know you will link this thing in practical life, that practically we have seen so many C corp are using cash method, but wait for the exceptions. Okay. And the other thing is, if a partnership firm is having a corporation as a partner, there is no restriction in type of partner. Only in case of S corp, we have seen that a foreign member cannot be a member in the S corp. Okay. Then there are exceptions. They cannot use the cash method for recording the advance payment of expenses. In that case, what are the exceptions? A farm corporation, okay, with gross receipts of 27 million or less, they can use cash method. So if you have seen any corporation who has filed on cash basis the return, you will see that the income gross receipts are less than 27 million dollar. And this is not for only farm corporation, but this is for any C corporation, any S corporation, or a partnership. If the receipts are less than 27 million dollar, and this should be for average last 3 years. Okay. If it is up to 27 million dollar, then you can opt for cash method. Else you will have to go for mandatorily accrual method. And if you are using accrual method, you will have to report inventory in your tax return. Okay, there will be inventory reporting in case of accrual method. If a corporation whose business is operating nurseries, just a minute, nurseries or sold farms and raisers and harvesters of a tree. So can I say this are related to farming income? If you are running the business in farming, you can use accrual method. There is no restriction of $27 million in that case. We will again see this thing in detail when we do the farming income topic. Okay, it is there in our part 2 syllabus, farming related income and expenses, trust related, estate related, all these topics are there in our part 2. We'll take it at the very last. Qualified Personal Service Corporation. Do you remember what is Qualified Personal Service Corporation? On the first day, we have seen that I have mentioned that this thing will be used again and again in our syllabus. The thing was, there were only two conditions for Qualified Personal Service Corporation, PSC, if you guys remember. Can anyone tell me what was the conditions? Two main conditions were there, guys. Anyone?
The first one was 5%, 5 employees.
5 or fewer employees are holding more than 50%, right?
Yeah.
In the last 6 months of the tax year.
Yes. And second condition was they are providing personal services, means their own involvement is necessary. Okay. So yes, it is correct. So they can easily use any method. For them, there is no restrictions that you need to go for cash only, you need to go for accrual only. A corporation or a partnership with a corporate partner other than tax shelter with average annual gross receipt of 27 million or less will be using accrual, will be using cash or accrual. They have the option. If your average income is more than 27 million, you have to remember this. Based on this 27 million calculation, they can have one MCQ on this. Okay. So this is about our advance payment of expenses. If it is made, you need to check it has to be accrued also and paid also. Even if you're using a cash basis, you cannot record whole amount as an advance expense. Even the bookkeeper might have recorded whole as an expense. In tax return, you need to adjust it and take only up to that much, which is accrued in the current tax year. Okay. Next important one is accrual method. Now it will be easier to understand. For accrual method, make sure you are recording the income, you are recording the expense in the year in which actually it is earned. Okay. Means I'll take the best example is sales. If you're selling a goods or services in the month of November, you have given a 60 days credit period. So it will be received, the money will be received in the month of Jan. So since the sales is completed, here you need to check three things. Three event you have to check. Whichever happens earlier, you will record the sales at that time in case of accrual method. Okay, what are the three events? You shipped the products, shipped the goods or service or goods or merchandise. You invoice the goods or merchandise and you receive the payment. Okay, these are the three methods or three events. Whichever happens earlier, you will record it as a sales on that date. Okay, there is one best example. I think not here, but I have seen it over here. For sales, there is one example. Just give me a second. Yeah, here it will be. Correct. See here, Mark is what? Accrual method taxpayer. He shipped $500 worth of merchandise on 30th December. So what is the shipping date? Shipped on 30th
December
of
30th.
yes, 22. Now Mark sent Ralph an invoice. Now invoice date is what? 2nd Jan. 2nd Jan. Okay, note down all the dates when you do it in the exam. Third one is it is payable in next 30 days. So Ralph has made the payment on Feb 2nd. 2nd Feb, he has made the payment. And actually this check is encashed on 6th of Feb. Okay. So let me know if it's an accrual basis taxpayer, on what date you will record the sales, whichever event is occurring earlier, shipping, invoicing, or payment. Here in our example, shipping is happening earlier, that is on 30th December. We will record it as a sales. Now let me know if you are a cash basis, on what date you will record this sales if you are a cash basis. I'll repeat again. Shipping is done on 30th December. Invoice is done on 2nd Jan. Check is received. Check is received on 2nd Feb and check is encashed on 6th of Feb. So on what date a cash basis taxpayer will record?
February 2nd.
Second,
Correct.
2nd of February.
The reason is constructive receipt. We will use here the concept of constructive receipt. Okay, this type of questions can be asked in the exam. They'll give you the case scenario kind of thing. Here, since it was accrual, so it is 30th December when the goods are shipped. Okay, so let's move back to our material. Accrual method is very easy to understand. I'll just go through it quickly. The main thing was this only: whichever event occurs earlier, you will record it. Second thing is, if you are having a gross receipt of $27 million more than, okay, they are not saying equal to, they are using the word more. In our e-exam, the wordings are important. More than, equal to, and or everything is important. more than $27 million in average 3 years of your gross receipt, then you will be recording all your income expense on accrual basis. Okay, so accrual method taxpayer accounts for income in the period in which it actually is earned by the taxpayer. Actually, they might earn the income when any of these three event occurs earlier. So under accrual method, income items generally have to be included no later than they are included for financial accounting purpose. And in financial accounting purpose, it will be included before any any of the earlier event. I'll just repeat one thing again and again. You have to remember shipping, invoice, payment, which happens earlier. Okay. Accrual method is required of certain persons and for certain transactions. If accrual method is used to report expenses, it must be used to report income item. This same line was there in cash method. If expenses are reported on cash, income should also be reported on cash. Same way, if you use accrual method to report expense, accrual method should be used to report income. Else, what will happen? Let's say people are using to report cash method for incomes and using accrual method for expense. Okay, or vice versa. Let's say they are using in this case, what will happen? See, first let's understand that cash method they are using to report income, accrual method if they are using to report expense, means your expense are recorded right now, but income it will be recorded in the future period when the checks are actually received. So this will create a loss in the current year, right? So that is the reason why they IRS will not allow you to use different method for income and expense. Either use same method for both. Okay. Next is taxpayer that maintains inventory must use accrual method only with regard to any purchase and sale. So let's say you are going to have an inventory in your books. So you can use purchase and sales as a accrual method. Okay. Now you want to record your expenses on cash method. So that thing will be allowed. This thing will be allowed, and this type of method is known as hybrid method, where you are recording, where in your books you have accrual method also, you have cash method also. Got it, guys? So qualifying taxpayer who satisfy the gross receipt test, that is 27, must be 27 million or less. See, that's why here for cash method, they have used the word less than or equal to 27 million. But for accrual, they have used only one thing, that is more than 27. I mean, exactly if you're having $27 million in exam, they will confuse you. They'll give you some amounts which will be exactly totaling up to 27 million. You have to take the average, divide by 3, take all the gross receipt, divide by 3. If it is exact 27, then you will get confused that whether we should go for cash or accrual. It should be cash only because less than or equal to word is mentioned. Okay. Then we have is qualifying taxpayer means gross receipt test we will check. Then we have qualifying small business taxpayer who satisfy gross receipt test for each test year. So here what will be there? Average annual gross receipt must be 27 or less. Taxpayer must not be a corporation. See, the type of entity should not be a C corporation or a partnership with a corporate partner for becoming a qualifying small business taxpayer. Okay, as the word suggests, it has to be small business. How it will be small business? It will be having a lesser gross receipts. Lesser gross receipt by what? $27 million or less. That is known as person eligible for using cash method. Third one is the principal business activity cannot be mining, manufacturing, wholesale trade, retail trade, or information industry. So if your client is using is into the nature of business, the nature of business of your client is mining, manufacturing, or wholesale trade, or retail trade, or information industry, telecommunication industry. These 5 business types can never use cash method, even if their income is 27, gross receipt is 27 or less. Okay, so this 3 condition, if you guys can remember, then it's fine. Okay, all right. Next is, see, we are going in a very slow manner. So even after completing the today's lecture, you just sit and go through the whole, book on your phone also. Then also it's fine. You can just revise each and every topic on daily basis. You will have to revise. You see, today is Friday, Saturday, Sunday, we don't have any session. From Monday again, we will be meeting with a new chapter. Whoever are going to enroll today will receive all the material and everything in the PDF format, right? So that they can revise on Saturday, Sunday. All the 3 days sessions will be there with you guys. Plus, we will be giving you MCQs also, so that on Saturday and Sunday you can solve it for the study unit 1. Okay. Now, generally, C corporation partnership with C corporation as a partner or a charitable trust with unrelated income and tax shelter must use accrual method. That is what it is saying. See, they are mentioning the same line. These people are given here. They can't use cash method. So what it is given in the next line, they will have to use a accrual method. Tax shelter means what? That kind of organization who are specifically designed to save the taxes. Let's say X and company is there. All the main income, let's say primary business of X and company is retail trade. So whole income which is related to retail trade and expenses are incurred through X and company. They have formed a tax shelter company of this same company in which any transactions which is not related to primary business but which are incurred just to save the taxes. That is, tax saving schemes are applied in this tax shelter company. It is a part of Accent company only. Okay, and it is legal over there unless and until you break any law or you are taking extra deductions or extra credits by using some unallowed means. Unless and until that things are done, this tax shelter is allowed. Okay, so tax shelter includes any arrangement for which principal purpose is avoidance of tax. Okay, the main purpose is to avoiding the tax for the benefit of X and company, and any syndicates and any enterprise in which interest must be registered as a security. Here, let's say you have a investment income. Now you don't want to include that investment income in the Exim company and increase its tax liability. So you will be considering it separately through a tax shelter and take a advantage of investment expenses. Okay, investment income is there. You can record investment expense only up to the amount of your investment income. So all that income and expense will be recorded over here related to the investment. Okay, I hope this much is clear. Exception to general rule allows the following taxpayer to use cash method if entity is not a tax shelter. If entity is not a tax shelter, they can use a cash method. This same thing we have seen when we have done the cash basis, right? Over here, you are allowed to use, normally you are not allowed to use cash method if you are a corporation, but if you fall under this 4 category, you will be allowed. The same categories are mentioned over here: qualified, PSC, okay, and a farming or the tree raising business. That is farming income. If you are going to earn, then you can go for this cash method easily. Okay, even if it's more than $27 million. Income included when all the events have occurred. See, this is the same thing which I mentioned. All the events have occurred. The income is included at that time. That fix the right to receive. See, as soon as you ship the products, you have received the right to get the payment done. As soon as you invoice, you have the right to receive the amount. As soon as the payment is done, yeah, actual the payment is done, then you will be record that as an income. So this is what it is mentioning in theoretical way. It is just mentioning like that. When all event have occurred, that fix the right to receive it, and the amount can be determined with reasonable accuracy. When you ship the amount, ship the goods, ship your merchandise, but you are not sure how much payment needs to be taken. If it is mentioned like that in the question, you will not record it when it is shipped. As soon as you invoice them, at that time the actual amount is fixed. Here the amount is uncertain, so you'll not record it right now over here. The certainty must be fixed, plus any of these 3 events which is occurring earlier will be considered. At the time of shipping, certainty of the amount is not fixed, so you will not record it at that time, but you will record it when the invoice is generated. Okay, That is what it is about, accrual method of accounting. Sorry, preparing the tax return. In tax return, you will see on the first page, there will be a checkbox, whether it's a cash method or whether it's an accrual method. So let's see one example is there. John is awarded a 10,000 bonus in 2022 if only half of the bonus is payable in 22, with the other half paid at the end of 23. Right? In 2022, he's going to receive only how much? 5,000, and the remaining 5,000 he will be receiving in 2023. But this half is contingent upon John's completing another year of services. Means, can I say the remaining 5,000? It's not certain. It is not sure. Amount we know that this much bonus you are going to get, but it is having a restricted condition along with it, that once you perform for one more year of service, then only you will get this bonus. So we will record only 5,000 in our 2022 tax year. Now let's say if there won't be any condition like this, the whole 10,000 will be recorded in the first year only. Got it, guys? The all event is tested, is satisfied when goods shipped on consignment are sold. Okay, this happens when we are shipping the goods on consignment basis. See, you are shipping directly to the customer, then you will take the whichever is earlier. But let's say you are shipping this goods on consignment basis, and then later on that person is going to sell it further. So we will check the event of that person when he is selling it further in the market. At that time, we will record it as an income. So all event test is satisfied when goods shipped on consignment are actually sold in the market. Okay, only in a rare and unusual circumstance in which neither the FMV received nor the FMV given can be ascertained will IRS respect holding a transaction open once the right to receive income is fixed. Let's say you have shipped the goods, but the amount is uncertain, or you have not yet invoiced the goods, invoice the customer. Okay, so this transaction will be called as a open transaction. Let's say in December you have shipped the goods, but in January also still you have not raised the invoice. So in December it will be called as open transaction, and in those circumstances income will be accrued when it is actually received. So in this only one circumstances, it will be called as, it will be recorded as per using cash method. Got it, guys? Any question till now? Okay. So I hope this much is clear. Now proceeds from any settlement of lawsuits are determined in amount with reasonable accuracy when received. See, lawsuits are always uncertain. Now, you are not able to find the conclusion on the very first day. But what happens if you need to pay the amount to the other party, or if you're going to receive the amount? So the amount is always uncertain. Even though you are an accrual basis taxpayer, this kind of proceeds or this kind of payments will be recorded always on cash basis. When the amount is certain, when you actually receive it, at that time it will be recorded. Okay, now prepaid income. Prepaid income is what? When you receive something in advance. They use the word prepaid. They'll now never use the word advance. They'll use payment. For payment word, they will use advance payment. Right? Here you can see there was one advance payment word used. Advance payment. But for income, they use prepaid. Okay, so any income which is prepaid will be included in the income as and when it is received, because we are using what? Accrual method of accounting, or accrual method for filing the tax return. Okay, so prepaid rent, what it is talking about is included in gross income in the year in which it is received. The rule applies to both cash and accrual. See, this is an unfair thing. Now, when you receive the rent in advance is received, it is fully recorded. Let's say 15-month rent is received, you will record the full 15-month. But when you pay the rent in advance, you are paying it for 15 months, it will be recorded only for 2 months, like let's say November and December. That was our example, right? But if you receive it in advance, you have to record it on the same day in the same year, even if you're using accrual or even if you're using a cash method. Same way for the purpose of prepaid income in case of services may be accrued over period of time for which the services will be performed. Let's say I am going to provide you the lectures for 45 days. Okay, and I'm receiving the payment in advance from all of the students. Okay, so whatever payment I'm going to receive in advance, I'm not going to record it in the current. Let's say today it's December 28th, so I'm not going to record all the income in 20 tax year 2022. I'll proportionate this into 45 days. So the proportionate amount will be recorded in 22 and remaining will be recorded in 23. So when I'm actually performing the services, based on that, in case of accrual basis, it will be recorded in proportion to the performance of services. Okay, but only if it does not extend beyond the end of the next tax year. Next tax year means 2022 you need to proportion, and whatever is remaining you need to proportion it to 23. Let's take one example. Let's say CPA fees you have paid to one institute, and for completing that CPA course they are going to take, let's say, 36 months. So 12 months, first 12 months will be recorded in 22, and remaining whole 24 months will be recorded in 23. There won't be any allocation in the third year. Okay, this is in case of prepaid income for services. Got it, guys? Any question till now? Okay. Next one is merchandise sale. As I mentioned, in case of merchandise sale, the right to income is fixed when it is earned. That is when goods are shipped. Okay, as soon as the goods are shipped, and if you have the value which is certainable, right, that this much income you are going to earn, so as soon as it is shipped you are going to include it in your income. Got it? Taxpayer who uses accrual method of accounting derive all the income from the service and do not charge interest penalties for late payment may use the non-accrual experience method to report the bad debt. So now here the accrual method bad debt question will come into effect, that if a person is not going to repay back, they can easily record the bad debt as and when there is a failure of payment. Okay, in cash method what will happen, the bad debt will not be allowed in your tax return. If your client is having a bad debt in your P&L expense side, you will have to check whether it's a cash basis or it's a accrual basis payer. If it's a cash basis it will not allow, but accrual basis they can use accrual method of accounting to derive all their invoice from services and do not charge interest on penalties for late payment may use the non-accrual experience method to report the bad debts. What it is saying, see, bad debts, let's say we have given 30 days to repay certain amount to a person. After 30 days, if you are not able to pay, after 30 days, there will be interest and penalties which will start getting levied on this amount. Okay, so even after payment, even after charging the interest and penalties, the person is not paying at all, and 90 days has been lapsed. Now this person has become bad debt. So whatever are this interest and penalties, we have accrued it, right? But we have not actually received it. So we are not going to include it in the income. Got it? Only for interest and penalties, we will using non-accrual method. Are you clear with this, guys? Just remember it practically. See, practically what will happen? I have given 30 days for some of the customers to pay for particular goods. But as soon as the 30 days are expired, there was a condition only that if 30 days are expired, if you are still not paying, 3% interest rate will be accrued on your income. So what you will do, since the income is getting accrued, I'll have to record it as an income. No, only for interest and penalties on late payment, this will not be considered on accrual basis, because ultimately if it becomes bad debt, again you have to take the deduction for whole amount, right? So IRS will not give you this thing, like they'll not do the repetition, like first you include an income and later on you take the deduction. No, just record the 30 days income, and if you're not able to recover it, okay, after 30 days, no need to record it in the income unless and until it is received, means you can use a non-accrual method for this. Clear with the fourth point, everyone, guys? For example, C corporation may accrue 2% gross sales as a bad debt expense when over the last 8 years, roughly 2% gross sales have been uncollected. Okay, so you can just remember this example. Whatever is the interest accrued or penalties which needs to be charged may use non-accrual method. Got it? Next is deductions. Expense are generally deducted in the period in which they accrue, right? In cash method, in which they are paid. Here, when they are accrued, the rent is accrued in November and December, but you are paying the rent in the month of Jan. Still, the expenses, if it is accrued in November, December, for this 2 months, you will take the deduction for the rent, even if it is paid in the month of January. Okay, so what is the condition which you need to check? All events have occurred that establish the fact of liability. You have used the property for 2 months, the liability has been raised, you need to pay the 2 month rent, right? So all the event has occurred that establish the fact of liability, including economic performance has occurred. Next is amount can be determined with reasonable accuracy. Till now you were paying the rent, you know the actual rent is $2,000 per month, for example. So you will be recording 4,000 as a rental expense, right? Next is, to the extent the amount of liability is disputed, let's say we are not sure whether we have to pay 4,000 or less than that, then the test is not met, but any portion which is still agreed by both the parties will be allowed as a deduction. If the amount is disputed, it will not allowed as a deduction in your tax return. Okay, economic performance occurs as the services are performed or as the property is provided for the use. What do you mean by economic performance? Let's say I am providing certain goods that should be used on the rental basis. Okay, let's say I'm providing some containers which will be used on the renting basis. So economic performance is done, I have given the goods for use, right? So as soon as the economic performance is done, services are performed or property is provided for use, then I can record it. Then that person, the other person who is going to get that containers for the renting purpose, he will be paying me rent in the next month. But today he is receiving the containers, is receiving the economic property for its use, he has already received the goods, then he will record it as a deduction today only. Okay, other liability for which economic performance occurs as the taxpayer makes the payment include liability for breach of contract. See, this again comes into picture. Let's say the rent payment is delayed, so due to the breach of contract or violation of law or rebates and refunds, if he is going to receive awards, prizes, jackpots, insurance, warranty and service contracts, all this will have certain kind of nature which is called as economic performance is still to be done. Means both way it has to be checked. I have done my side of economic performance. I have given him the containers to use. Now his side of economic performance will come after 30 days. 30 days has been passed, the economic performance is not done. So since economic performance is not done, he will have to pay me what? Some penalties and interest. He will take this deduction, okay, when it is actually paid. Got it, guys? So this is a vice versa case only. In income also, when it is actually received the interest payment, then only I will record it income. Same way, we will record the expense for interest and penalty when it is actually paid. Else what people will do, people will not pay the rental expense or will not pay any rental amount to the owner, and they will keep charging on penalties and interest, and they'll take the deduction on the tax return, which will be not fair. Okay, so both the ways it should occur, the whenever the economic performance are done. Okay, let's read this one last point again. Once economic performance occurs as the taxpayer makes the payment, include liabilities for breach of contract. Means this breach of contract is done or has not paid the amount on time, or if there is a violation of law, or if there is a rebate or refund which this person, the container who is purchasing the container, is receiving the rebate or refund, award, prizes, jackpots, all these things will be included on actual basis. He can exclude it on actual basis as a deduction. Same way we can include it as an income on actual basis when it is actually received. Got it, guys? Accrual method is clear. If it is clear, then hybrid will be not an issue. In hybrid method, only three things you have to remember. Three things you have to remember. Any combination of permissible accounting method. Permissible accounting method is what? You can record purchase and sales on accrual basis. You can record expenses and other incomes on cash basis. Okay. Or you can go for whole accrual basis, or you can go for whole cash basis. So combination of accrual and cash will be your hybrid method. If inventory is used, accrual method must use for purchase and sales. The cash method may be used for other receipts and expense if income is clearly reflected. Okay, this is the example of hybrid. If a person wants to use a different method for separate businesses, see, it can happen now. Person is having business A, business B, C, and D. All three are not internally related. So business A can use accrual method, B can use cash method, C can use hybrid method, D can use again accrual method. So this thing is allowed. Okay. Person may use different method for separate business as long as method used for each business clearly reflects the income of that particular enterprise, and this all should not be interrelated with each other. Okay. Hybrid method for reporting expenses that includes the cash method is treated as cash method and is subject to limitation that apply to cash method. Means what? Hybrid method says that if you're using cash method for reporting expense, then you have to use cash method only to report the incomes, and all the limitations of cash method will apply to both. What were the limitation? Bad debt cannot be recorded in cash method. Okay. Second is you can only record the prepaid expenses only for the duration for which it is accrued, the rental expense, if you remember. Same way for the rental income, you will be recording only for the 12 month in advance and only up to December, not more than that. Got it, guys? Next is related parties. Related party is something which will be considered that if very close person, a family member, or anyone else with whom you are doing a transaction, that will be called as your related party. The code requires matching of deduction claimed by the payer and income reported by the pay. Let's say I am purchasing a land from my sister. So when she is going to record the income, I will have to record it as an expense. In case of related party, if she is using cash method, I will also have to record that income on cash method. If she is using accrual, I'll have to use accrual. So in related party, you are like using a same method. Mutually, you are going to decide. The payer and payee will use the same method. Okay. See what it is there. Typically, if a pay means, let's say I'm purchasing the land, is a cash basis taxpayer. I'm a cash basis. So what I will include the payment in income in the taxable year received, and the payer will then deduct the payment in the same year. Means they both will have to use cash method only, not accrual. If both are using accrual, then they both will have to use accrual method, or else there will be a difference in timing to record the income and expense. Right? This mainly happens between any transaction between taxpayer and spouse, child, grandchild, parent, brother and sister, or a related corporation. Related corporation means what? If you are owning more than 80%, for calling it as a related corporation, 50% is not checked. 80% or more, if you are holding, you will be directly related to that corporation. Or in case of S corporation, if you are more than 50% of shareholding. In S corp, it will be seen as a 50%. Don't get confused right now. In corporations, S corp partnership, will see the related party transaction again when we do those topics. Okay. So here you have to make sure related corporation, S corporation, or a related partnership, estate or trust. With these people, if you are entering into any transaction, make sure the payer and the payee uses the same method of accounting. Sorry, in tax return. Accounting, they can use any method, but when you prepare a tax return, make sure to check the both methods. Deduction of any amount payable to related parties allowed only when included in the gross income of the related party. So that is what it is saying. If other person is using accrual method and I am using cash method, I am paying the amount, that person is going to receive the amount. So since I have taken the I have not yet paid the amount, so I might have not included in my income. And this person is using accrual method. So what this person will do? This person will include it in the income as and when the services are performed. Okay, or vice versa case, we will take accrual basis person is paying the amount and cash basis person is receiving the amount. So I can say it's a pay. Okay, this is a payer and this is a pay. So what will happen in that case? This accrual method, when pays certain thing, he will take a deduction. But this cash basis taxpayer will not take the deduction unless and until the cash is received. So you have to think it practically that both will have to record it as a same method to avoid any non-inclusion of income or taking extra deductions. Okay, I hope this is clear. Next one is, here there is one example. Let's see the example what it is. Individual cash method taxpayer owns 55% of accrual method corporation. Okay, so accrual method is used and he is holding 55%. The corporation owns the individual 5,000 for rent accrued. Okay, so from this individual, see, individual is holding 55% in the corporation and this is using accrual method, and this corporation needs to pay to the individual a rent for 5,000 in year 1. In year 2 5,000 was paid and reported as an income by the individual, reported as income for individual. Okay, so individual might be using what method? Cash method, because he is receiving the income in second year and he is reporting it in the second year. Because the corporation and individual are related. Okay, for corporation it is 55%. Somewhere we will see it will be 80%. But remember, more than 50% if the individual is holding in corporation, it is a related person. So since the corporation and individual are related, the corporation must wait to take the deduction. He cannot take, see, since he is on accrual basis, he can't say that 5,000 has been accrued, the rent amount has been accrued, so I should take a 5,000 deduction. This is not allowed. Unless and until this person includes it in the income in the next year, this person cannot take that deduction. Got it, guys? I hope this one is clear. All the accounting method, now it is done with we have done with the entities, we have done with the accounting methods. Okay, let's solve some of the MCQs and then we will be left with the inventory valuation and periods. Period, we will have only 3 types of. One is the calendar tax period, and second is a short return tax period, and third we will see, like, I will be linking the topics from the different chapters also. So along with this, we will see in case of partnership. In partnership, if the partners are using different accounting method, accounting period, let's say they are using June to July, or let's say some person are using March to April, some people are using this Jan to December. So which accounting method you are going to use? It will depend on the percentage of their holding in the partnership firm, their interest in the partnership firm. It will depend on that. Got it, guys? So this we will see tomorrow or maybe on Monday later on, because this I need to link the partnership topic also along with this. Next is inventory valuation. I will request everyone to go through the inventory valuation. We will take this in class, don't worry, but at least go through it once by your side. Tomorrow is anyways weekend. So once you get the material, go through the whole study unit 1. And this MCQ, first I will share it with you guys. Okay, try to solve on your own and then we can discuss any question in any MCQ. See, I'll just start reading and solving it in the class. There will be no I can say a reason where you can practice. Okay, you should practice practice on your own after completing the lecture. So I'll share you the MCQs also. This whole short PDF is there on whole study unit 1, where you can check all the topics in a short manner. Okay, so that's it for the day, guys. I will be sharing all the material and everything till today evening or maybe tomorrow morning, so that you can start studying. You can go through the recorded sessions over this weekend, and from Monday we will be starting with our remaining topics. Okay, thank you guys, have a good day.